Excellent. Well, thank you very much for joining. We'll just give it a couple of seconds as people are streaming in from the earlier session happening today in SupTech Week 2024. Okay, so just getting my bearings here. Apologies. So everyone, welcome to our session on building supervisory powerhouses, data strategies to drive actionable insights. Now, wherever you're dialing in from, I kind of realized I got stuck with it's good morning, good evening, or good afternoon. So I'm just going to stick with good day and night to wherever you are. The session today, my name is David Hardoon. Currently CEO of Aboitiz Innovation, but perhaps more relevant to the context, ex-CDO at the Monetary Authority of Singapore. So all at home. In the whole topic about supervisory technology, which if you think about is quite interesting, it's really meant to help differentiate it between the focus, the relevancy, and the attention on what the financial institutions are doing and should be done from terms of the rectech. But the two are interestingly connected. So what we're hoping to talk today and really hear from the thoughts from Ramūnas and Roman, who I'll give in a second to kind of introduce and give a bit of color in terms of their backgrounds and what they've been focusing on before we dive in a bit deeper, is really to kind of start teasing them this topic open and to a certain extent apart. Because look, SupTech isn't new. Well, RegTech is definitely not new from that perspective. And we've heard terms in terms of standardization, interoperability, automations and digitalization and submissions from regulatory perspective. Of course, once we open that, we start realizing that there's a lot of same old aspects, such as data quality and integrity. So what is it really and what we're trying to achieve? So with that, allow me, Ramūnas, please kick it off in terms of just brief intro and background, and hand to Roman, and we'll take it from there.
Okay, so good day, everyone. I'm Ramūnas Baravykas, Chief Data Officer at the Bank of Lithuania, where currently I lead efforts to transform the institution's data management framework. I oversee initiatives such as the Data Management Maturity Program and chair the Data Governance Committee at the Bank of Lithuania. So one of important milestones was leading a proof of concept on streamlining the reporting framework, which explored how RegTech solutions could improve reporting for financial institutions and supervisors, going to granular data collection instead of aggregated template-based reports. So this work has shaped the approach and the data strategy that drives our data management maturity program towards digitalization and insight-based supervision. So over the past 2 years, I would say, we have collaborated closely with electronic money institutions and payment service providers to develop a granular data set that addresses the majority of their reporting requirements. So this approach aligns with our broader goal of fostering standardized data schemas, harmonized exchange formats, and seamless API-based integrations, which are essential for interoperable supervision. So my focus in recent years has been on evolving supervisory approaches, complementing traditional methods like rule-based supervision, risk-based supervision with insight-based supervision. I mean, leveraging granular data, machine learning, and real-time analytics to strengthen resilience, improve transparency, and enhance regulatory efficiency. So for me, this session topic, building supervisory powerhouses, data strategies to drive actionable insights, is exactly the definition of insight-based supervision, which is advanced form of supervision that leverages data analytics and AI. So today's discussion is, I would say, incredibly timely as the financial supervision landscape continues to evolve. So in my experience, standardization and interoperability of data are not just technical necessities. They are fundamental enablers to trust and efficiency and collaboration between regulators and financial institutions. So at the Bank of Lithuania, we've seen firsthand how granular data harmonize data schemas, simplify reporting, and also could reduce cost and enable better decision making. However, achieving this outcomes depends on addressing few critical factors like granularity and data quality, legal frameworks, technological enablers, and interoperability. I believe that the key challenge and also opportunity for supervisors is to develop data strategies that bridge the gap between these factors, enabling them to stay ahead of emerging risks while fostering a culture of transparency and collaboration. So I look forward to exploring these themes further and hearing the perspective of my fellow panelists and audience.
Thank you so much, Roman.
Thank you. Thanks. Well, thanks very much for having me here. Thanks to the organizers and thanks to everyone in the audience. So Roman Kovalenko, I'm the Chief Data Officer at the Reserve Bank of Australia. So as a Chief Data Officer, my role is to make sure we've got all the platforms, tools, etc., to work with data, that we have all the data that we need and that it sits somewhere secure and appropriately accessible, and that our people have all the right skills to work with data, and that we've got all the processes, roles, responsibilities, etc., governance in place. But I also oversee the Reserve Bank's the Innovation Lab, which is our vehicle for experimenting safely with disruptive technologies and adopting those technologies where appropriate. And the big sort of focus in that area is AI these days, right? So I'm a Chief Data Officer and I guess also Head of Innovation and AI at the Reserve Bank of Australia. I also was an entrepreneur many lives ago in the past, and I feel very passionate about innovation and sort of new technologies, and I continue to do some mentoring for various interesting tech startups across the world. So very passionate about the space. I should add that in a typical central banking fashion, I should put a disclaimer here that everything I say is my views and my views only, and they're not necessarily the views of the Reserve Bank of Australia. And the other thing I would say here is that unlike Monetary Authority of Singapore or perhaps the Central Bank of Lithuania, we don't do all this supervisory work in Australia, so it's a little bit more sort of fragmented, the ecosystem of financial regulators here. So we do a little bit of supervision, but also a lot is done by other agencies with whom we collaborate. So I'm not sort of a financial supervision guy through and through. I've got a bit of a sort of fresh set of eyes perspective here, which I think this coupled with the fact that I'm not representing the Reserve Bank's views anyway, I'm speaking as an individual, I think that this makes it a very interesting conversation to me, because I'm really keen to explore some of the developments that might be coming out of subtech and financial supervision that are actually translatable to wider set of technological patterns or business problems. So that's what I'm sort of hoping to explore in this conversation, kind of a very open topic like that.
Oh, fantastic! Thank you so very much, Ramūnas. And just to add, ladies and gentlemen, we also have Sholthana Begum, who's the chair of the technology group of the regulatory Genome project at the Cambridge Judge Business School. But I believe there's some technical issues, so initially we'll just commit this with us, and if she's able to join us, it'll be fantastic to get it in, because I truly would love to ask her about the regulatory genome, the whole mixture between the biology and supervisory space, and what does that mean. So, gentlemen, I want to start with just a bit of a light note. And as I mentioned, so through my own experience, I think this was back in 2017 when the term was kind of introduced of supervisory technologies. There have been many debates of what it is truly. And when you think of it in the lens of from the banking world, from the financial institutions perspective, where it seems to be becoming more and more akin to a technology and technology hub, with many actually CEOs having a background of being engineers rather than the so-called traditional bankers. So just in a short, brief perspective, what is really supervisory technology? I mean, Ekwe, number one, is there a so-called unifying terminology that talking about standardization that we can all agree on, or what is, from your perspective, supervisory technology, sorry, and the aspects that need to be focused on in order to make it, well, successful? Ramūnas, please.
So obviously that technology has been used by supervisors for ages. But the way we now use that technology is completely different, I would say. So I would start from digitization. This is the process of digitizing information digested in the business process. Many businesses have already begun or are advanced in transitioning most of their assets from analog to digital. Think letters, memos into email, paper forms to manuals now available in, let's say, accessible digital formats, or perhaps shared areas, shared access points. So the next phase was digitalization. And this phase enables the automation of the whole process or workflow, changes roles and competences of those involved in the processes. So the e-government, I would say, concept is based on the digitalization, where traditional ways of working is supplemented by electronic channels and control to workflow. So digital transformation is more than just technology. And I believe that subtech comes in this field, actually. In this stage is the profound change in the business model and supporting activities and, of course, of competences. So digital transformation refers to the fundamental and comprehensive restructuring of an organizations' processes, strategies, culture, and technology to leverage digital technologies and capabilities in the way that it drives significant improvements in performance of operations and value delivery. But I would say that this value should be delivered not only in the scope of the financial sector supervisor, but for the whole industry as well. Instead of building better tools to deal with collected data, to recognize patterns, we should change the way the supervision works, not to have the long cycle of the supervisory life cycle, but to have the platforms for data collection and insight sharing. This would help to work together with the financial institutions for the better market resilience. What comes with the subtech, I would say that we introduce the collaborative approach in the financial sector supervision, together work with the financial institutions for the better stability, financial stability and soundness of the whole financial system.
Oh, fantastic. Roman, your take.
Thank you. Yeah, actually very similar to what Ramūnas said. I mean, I'm sure there's a definition, or probably a few definitions of subtech out there, and they probably say something like using the latest emerging technology and analytics techniques to collect more data and supervise better, detect risks, identify anomalies, etc. But I like the sort of the digital transformation angle as opposed to digitalization. So digitalization is meant to be, doing the same thing that you were doing in the manual world, but using new tools. And then digital transformation is when the tools are so disruptive that the actual way of doing business or doing whatever you do is completely changed, right? So think calling a taxi via an app. Digitalization, digital transformation is something like Uber, right? Ride sharing. And so really, I think the definition that, subtech is using technologies to collect data and supervise, that really doesn't do it justice. I think there's so much potential in things like subtech, regtech, that it's really kind of a complete change in how the market participants and the regulators interact. And I quite like something I came across in one of the MIT CISR research findings recently. They've coined this term BizTech. So it's sort of taking your health tech, subtech, regtech, insurtech, right? And you sort of abstract it up in your BizTech, right?
I like that.
So this is where that's right. And the idea there is that I think they've got this whole sort of body of work suggesting that more and more business executives have been coming from tech backgrounds. So, a marketing executive might come from sort of data science and ad tech kind of background, et cetera, right? So biz tech, right, where technology actually becomes the new way of a completely new way of doing business. And so I think subtech fits that sort of that new paradigm quite nicely. And in terms of what needs to happen for it to be successful, well, obviously there needs to be a strong and healthy regulatory system, right, in the first place. But data, you need high quality data, standardized, because subtech is a sort of amplifier and a multiplier tool, and it's only going to be as good as the data that you collect. And sort of there's lots of benefits to data standardization, and I'm sure we can get into that a bit later. But also, thirdly, so in addition to kind of an overall business regulatory financial system and standardized open data, I think what also needs to be quite mature is the cost-benefit approach to where subtech and this sort of data schema and standardization is justified, and to what extent, and where it isn't. And again, I think it's a very complicated area where there's quite a lot of maturation yet to do.
No, I really like that, and I like that aspect of BizTech. I'm going to keep a mental note of that, because it is kind of getting quite long with the something tech, and moving that. But Roman, if I stay with you, and as we're kind of peeling the onion, and you're absolutely right, I definitely want to get into the topic of the data standardization, and something that both of you have mentioned, which I think is absolutely fascinating, is the fact that it's not just about digitalization. It's not just about here's a report and we're just going to make it essentially through some kind of more streamlined interface and it moves. But it's fundamentally, how does it change for arguably naturally the better, the ability of identifying potential risks, policy aspects, and so forth from the overall supervisory dimension. But if we kind of break down the terminologies and we kind of really think about what does it mean and the potential impact to the business and policy decisioning, help me split the some of the truth and the myths. So what are the things that, again, and obviously every institution will have its own slight flavor. I think we need to call that out. But especially for what has already been done by yourselves, what are the things saying, well, look, this is a bit going down the rabbit hole. These are some areas that may be a bit more of the myths than the truths. And equally, what are the things that should be anchored?
Okay. Myths and truth. I mean, many, yeah. One thing that's true is that there's an upfront cost to standardization and standing up that technology. I mean, maybe let's just talk about the benefits first. Start on the optimistic note first. So, for sure, this sort of standardized data and sort of technology applied to it, that reduces the regulatory burden on the businesses, reduces regulatory burden on small businesses who really can't afford that burden, reduces the burden on large corporations who might have a bit more sort of weight to afford some regulatory burden, but there's so much of it on them that, again, any alleviation would be nice. So that helps kind of the businesses focus on the business rather than regulatory reporting. It helps regulators. We get more data, higher quality data, so we were able to compare apples to apples, so to speak. So it ensures consistency, transparency, which ultimately if we can identify risks properly, we can benchmark companies against each other, we could compare apples to apples. That creates trust in the system. And ultimately, you could almost work towards having sort of a unified view of the whole financial system in the nirvana, right? When you've got all the data coming to you in near real time. It also improves security and privacy. If data is standardized and everything's automated, there's less room for improvisation and loose ends that could then be exploited. I mean, the other, so that's kind of on the supervisory side of things. The other benefit of SupTech and open data more generally, so all the sort of data standardization that's necessary for SupTech that often doesn't get a fair mention is the innovation that it drives by standardizing and freeing up all the data that's out there in the financial system with guardrails and making that data easily available to the innovation ecosystem. You really empower the innovation ecosystem. So that's where you've got your RegTechs, your all the AI, ML startups, right? That actually need data to build successful models. So it sort of drives innovation there. And interestingly, there's also a very interesting research I read from Oxford a couple of years ago. I think Professor Pinar Ozkan was the name of the academic, around how things like open banking were actually a driver of innovation in the space of API. So it's a bit of a unusual example where regulation drives innovation rather than sort of the other way around, where innovation happens and then regulation follows, right? So there's sort of just the benefits are potentially huge, right? Lower burden on the businesses, richer, faster insights for the regulators that enable better supervision and better trust, and nurturing the broader innovation ecosystem. But then the costs are also there, right? You've got to stand up these systems, structures, frameworks. You got to feed and water them. So you got to maintain a team of IT and data professionals. And the other thing is that the landscape changes so quickly right now that these standards can often get sort of whatever sort of your SupTech does right now can get obsolete quite quickly. So there's quite sort of a lot of ongoing maintenance required. So there's a big cost that needs to be factored in there. And what makes it difficult sometimes is that the party reaping the benefits is not necessarily the party paying the costs. So there's a bit of a sort of market imperfection there. So it's very hard to make a holistic business case there. And then you also have areas where things like standardization and technologically driven supervision are just sort of maybe a bit of an overkill and not really sort of fit for a very customized industry or geography, etc. So it's kind of sort of a lot of complexity on the fringe. And so I think, there's a lot of appetite to drive standardization and embrace these technologies like SupTech that are kind of like revolutionizing the way we do supervisory work. But I actually think there's a time and a place, and there needs to be a strong business case for it. And that business case can be a bit complicated to quantify, but there's also a time and a place where perhaps we're not quite there yet, and things are not ready for standardization, automation, etc.
It's a difficult thing, and I think that's kind of the devil's in the detail, as the saying goes, of identifying where there is those underlying opportunities and moving ahead with them, and where the ones which maybe are not yet quite ready and need to be cooked a bit more. Absolutely. And then that other point that you mentioned earlier, which I like, in fact, having now been wearing the two hats, from an ex-regulator and exponential institution, I call it weaponizing the regulator, but you've put it a lot more elegantly in terms of actually regulation, or maybe not regulation, but the regulator is an instigator and a drive for innovation. And that kind of creates that really nice balance that actually it's not one versus the other. It's effectively both either internally or externally driving the abilities with technology. So on that, and Ramūnas, I want to go to you because look, Lithuania is renowned. You know, I've in talks, conversations, had the pleasure of being there. You know, but the government can run basically just up and move. Everything's digital, everything from that perspective. But again, I want to start peeling up the onion, and I used to joke and say that sometimes when financial institutions submit the regulatory returns, you have the I call them the gophers in the white coats, which will manually adjusting and fixing things and getting it right and so forth. So calling a spade. In the end of the day, all of this, all the possibilities of innovation, all the possibilities of supervisory actions with the automations of technologies is fueled by data, which is dependent on that submission. And as you kind of see where I'm going with it, the standardization of it. Has that manualness and the gophers in the white coats, has that been pulled out? Is that really now potentially streamlined, or is that still a bit of a longer term ambition as part of standardizing data?
Very actual question, because currently we are, I would say, in the middle of this journey. Because I would like to refer to our RegTech initiative. Actually, when we did this RegTech initiative a couple of years ago, we were very ambitious, I would say, to move everything into a granular data level. But it was just a proof of concept, and it gave us a lot of trust in moving in that direction. But what we faced, actually, that yes, I would like to come back to those critical factors I mentioned in the introduction. So granularity and data quality is obvious, the fundamental factor for enabling subtech and moving into better supervision. But legal frameworks, so justifying data granularity and the scope of you submit on or ask from financial institutions. So you need to justify, and by your mandate and purpose, and questions of proportionality and necessity must always be addressed. But simply aiming to build a less burdensome reporting framework is not enough, and supervisors must demonstrate how those granular data contributes to risk management, regulatory compliances, and stakeholder trust. And so this legal framework is often complex and requiring a careful balance between innovation and ensuring that supervisory strategies remain effective and legally sound. So what we learned, that not everything what could go granular is justified by legal acts to be in the granular level. So
you're not collecting all the data.
We are not collecting all the data yet, but we are experimenting with some particular institutions which are very keen on being granular. So we work together with electronic money institution and payment service providers. So we recognize that solution that is streamlining data exchange brings benefits not only for financial institutions and regulators, but for the industry as a whole. So for institutions, we already mentioned that reporting burden is reduced. And while Roman was discussing about costs and benefits, we actually saw that costs are reducing going to granular level, because to implement solutions to exchange data at the granular level is less costly compared to the aggregated template-based approach, because for each cell, for each data point, you need to define particular query instead of just pushing all the data you have at your management information systems. That's it. So costs, I would say, particularly for financial institutions, would be lower. not the same for the supervisory authorities, because they need to upskill to embed some subtech tools which would manipulate the granular level of data, because usually supervisors have capabilities to read balance sheet, to understand P&L accounts, but it's not enough to do that. You need to go deeper in the granular level of data and to unveil, I would say, risks at the very early stages, which is hidden by not granular, but aggregated level of reporting. So I would say that costs would lower for financial institutions, but could rise for financial supervisory authorities. But that allows for regulators to be more efficient, I would say, because granular data and real or near real-time data increases accuracy of interconnectedness and contagion risk analysis, and brings possibilities for pattern detection and sentiment analysis and many more. So this highly outweighs the costs with the introduction of granular data reporting. And for the industry as a whole, platform for data and insight sharing brings the increase of transparency, and not only for the financial institutions, but for the whole industry. And the whole industry receives the possibility to work together for the better resilience, not just have that supervisory authority responsible for financial stability, but we could share by sharing insights derived from the granular level of data with the financial institutions, work together to I would say, understand emerging risks and to take necessary actions before it escalates.
Yeah. So Ramūnas, you said something there, and tell me if I quoted correctly, because it almost feels like there is this iterative reality that needs to be put in place, both in terms of creating the, well, it's a legal framework or framework, be in terms of understanding with respect to the level of specificity, i.e. granularity of the data. That's what I'm saying. It kind of almost feels like there's some degree of this backwards and forwards conversation to adjust it, because it may underlying change. But how do we get there? Because, you know, if you think about, and again, not to be unkind, the kind of more traditional sense is things are cooked until they're right, and then it's an issue, and then we start collecting. Whereas now it's, well, actually, we want to try collecting this, or we want to try moving it to this one. We want, how do we move, if we move, to this kind of more environment of flexibility in a kind of realistic sense, if I'm kind of hearing this correctly?
Yeah, actually, it's like continuous dialogue. Some market participants obviously understand very quickly that for them to submit granular data is very beneficial, because somehow you get rid of situations where you discuss with a supervisory authority whether you understood how to correctly aggregate, and whether it was made a mistake on reporting tablet, whether it was done something on purpose. And you get rid of these unpleasant situations by submitting very granular data, and the supervisory authority takes the role to interpret the granular data and derive necessary key risk indicators, etc., etc. Yeah, but not all the financial institutions are in favor of moving to granular data. But now the topic of data granularity is quite wide, and I would can bring some pan-European examples. For example, European Single Access Point. Yeah, this initiative is establishing a unified platform where financial and non-financial data would be accessible in an interoperable way. So SAP will actually transform how regulators and institutions will share information. It won't be very granular level, I would say, but still, the system should be interoperable. But there's many more, like BERT initiative, IREF initiative, DPM refit, etc. So I would say that currently this approach, standardization and interoperability are no longer optional. We're just discussing the level, yes, but they're the backbone for efficient and effective financial supervision. So actually, when we will have those all capabilities, we will achieve that data sharing is frictionless, compliance becomes simpler and less costly for, first of all, financial institutions, but the second, also for financial supervisors, and collaboration across even borders and jurisdictions would strengthen the global financial resilience. So I would say that we are still discussing, experimenting, etc., but the global trend is that we are moving in standardization, interoperability, and more granular level of data.
No, fantastic. I want to slightly take a shift and talk about the nuts and bolts, literally. Roman, all of this has a certain degree of, I don't want to say assumption or presumption. The terms can be interchangeable in this context. On one is, obviously, we're dealing with a variety of tiers, of capabilities, of competencies, of players in the financial institutions. You have, obviously, from the first tier one players, which they can do it. They're very comfortable with the scale of the infrastructure, the data collection. They may not be too happy sometimes if we're asking them to do more data, but they can handle it. Versus literally a mom and pop shop, which look, we are running on Excel. What does it actually mean? So if we kind of move towards what I believe is the aspirable future of data collection, degree of granularity, again, specificity, running these processes, not just from automation, but really kind of driving the future of supervision for stability. How do we, if I use that term collectively as supervisors, regulators, see this homogeneous, effectively, infrastructural dependency in the industry? Is the burden now on the supervisors to accommodate for it?
Well, we should ask Ramūnas, because I think Lithuania does a lot more sort of supervisory data collection than we do here. But my 20 cents would be that's exactly what I meant with the whole cost benefit thing, right? I think the overall trend is clear, but there's a lot of Brownian motion as we're sort of on that trend, and there's a lot of detail, and that's why I think what Ramūnas was talking about earlier, which is sort of, if I could just maybe crudely summarize, it's all just a giant agile project on steroids. You're just gonna iterate, learn. You sort of pick your priorities, you fix them, you pick something else, then you go back to the first thing, and it's just a journey, right? But you got to do it in a responsible way, because it all consumes resources, right? And that's where the kind of the responsible cost benefit analysis comes in. So that would be my answer, right? There's no silver bullet to it. I mean, there are some tested and tried tricks and standards and techniques and tools, but by and large, the business landscape is evolving fast. And so the response to that also will continue to have to evolve fast. And the only way to manage that is through just this sort of iterative incremental approach, and prioritizing, and just being very well governed with where we apply standardization and deploy these tools versus what we leave for later, and also where we do apply them, to what extent, and how do we do it the smartest way possible. You were hoping maybe for nuts and bolts, but this wasn't really a nuts and bolts question.
No. I mean,
how do we tackle complexity? And the answer is this, right?
That's one aspect of it in terms of the industry, but then ultimately everything comes home. to ultimately the institution, to the regulator, the supervisor, the central bank, whichever flavor from an entity perspective. Now, arguably, that's a lot more data from a volume perspective, from a frequency perspective, than what has been traditionally the case. Arguably, and I was kind of alluding at the very beginning of our conversation, I would think regulators, and again, supervisors, central banks, etc., policymakers aren't really a technology organization. But now doesn't mean there is that necessity of building up that capability to handle that volume.
I mean, that could be an option, and the other option might be partnering more with the SupTech, RegTech ecosystem. But I want to see Ramūnas if you want to maybe come in on this too, because I think.
By the way, before you jump in, I think Roman, you nicely opened the door, by the way, for PPT. But Ramūnas, please.
Yeah, I'm not sure if. Maybe I would like to come from a bit further, actually. Who drives innovation in the supervisory area? And my answer in this is that innovation in data strategies and supervisory functions is driven by individuals with ambition, vision, and deep understanding of customer centricity. And in this field, customers are financial institutions who is supervised. So these are the people who not only recognize what stakeholders need, but also understand the competitive pressures that drives business to continuously improve. So I would jump to completely different area. For example, let's consider parking lots in busy cities. Even the most unattractive parking facilities tend to stay fully booked because demand often outweighs supply. And I would see that supervisory area is not in the competitive environment. However, when multiple parking options become available, operators begin competing to offer better services and experiences. This competition drives innovation. In modern cities, we now see fewer human-operated parking lots. Instead, machines have taken over the level of convenience offered various options. Some systems require you to print a ticket, store it, insert it into a machine, and pay in cash, for example. Others use license plate recognition, allowing you to select the plate on the screen and make a contactless payment by card. The most advanced systems integrate with apps linking your license plate to payment methods, and these apps guide you to the nearest available parking space, let you drive in and out without stopping, and process payments seamlessly in the background. So this evolution shows how business leverages innovative solutions and data to create value in a competitive environment. They adapt quickly, anticipating customer needs and removing pain points to stay ahead. In contrast, regulatory and supervisory authorities operate in non-competitive environment, I would say. So unlike business, supervisors do not face the risk of being replaced by more efficient operators. This lack of competitive pressure can sometimes hinder the drive for innovation. So today, it is primarily ambitious leaders, those who understand stakeholder needs and recognize the potential of data and technology, who bring innovation into regulatory and supervisory value chain. These leaders push for modernization, striving to improve efficiency, transparency, and resilience in the system. That's my take.
Yeah. So allow me to jump in, and unfortunately we're kind of running on time. We can definitely, and I would argue, should continue this. But to kind of summarize it, at the end of the day, it is in terms of creating that schema from a regulatory perspective. Yes, there are certain perspectives and questions that have to be put in place. It is an uncomfortable, slightly experimental, backwards and forwards. But very interestingly, and that's to me one of my take-home messages here, it's not just about the digitalization of it. It's effectively becoming now, and something that perhaps as policymakers and supervisors, in terms of how to trigger, in a positive sense, the industry, really force transformation and innovation. This is kind of a nice perspective to soup tech. It should be soup innotech, if not Roman, the whole biz one. So again, just want to say a very good night to you, a good morning to you, and thank you very much for listening and tuning in to us.
Thanks, Ramūnas. Thanks,
Thank
David,
you.
and thanks to everybody in the
Thank you.
audience.
It was a pleasure.
Cheers.